Welcome to AM Best Audio. LexisNexis recently released its Homes Trends Report. The report paints a striking picture of how loss severity, catastrophe exposure, and weather-driven perils are reshaping the homeowners insurance landscape, highlighting where risk is intensifying, where it's moderating, and what it all means heading into 2026. I'm John Weber for AM Best Audio, and I'm speaking today to George Hosfield, Vice President and General Manager of Home Insurance. George, so glad you could join us today.
Hey, it's great to be here to talk about this. Thanks for having me.
So, George, the 2025 Home Trends Report paints a picture of continued volatility across perils. From your perspective, what are the most meaningful risk shifts carriers should be paying attention to heading into the next policy year?
Well, really quickly, weather and inflation seem to be the big themes. Weather's inherently volatile. So looking at things over the long term, you can see that overall weather losses continue to become more common and more severe on a national level. But when you look at the story on a regional level, it's often, from one year to the next, you can have pretty significant swings. One year the story might be wildfire, the next year it might be wind or hail. You've got to remember that the U.S. is a large, very volatile landmass. So while the details of the story do change from year to year, when we look across it at a national level, you really do see that continued upward climb. Short term, though, I think inflation is probably front and center. Recent home construction cost increases have certainly driven a lot of changes in loss severity. And there's also that factor of social inflation, which, while not as acute as it is on the auto side, certainly also factors its way into homeowners insurance and the rising severity as well on that side.
We're seeing notable differences in loss experience across states and regions, including areas that historically have not been high risk. What should insurers take away from these emerging geographic hotspots, and how might it affect how they underwrite and price risk at a regional level?
Yeah, regionality is kind of one of the fun things about property insurance. Put fun in parentheses or in quotation marks if you like. But wildfires frequently been in the headlines. 2024 wasn't really a standout year, but then as we look at 2025 to date, certainly the LA wildfires are definitely going to leave a mark when we look at the annual figures for 2025. This is definitely impacting underwriting. That has been, I think, pretty covered pretty thoroughly by the media. But I would point out also maybe a less dramatic change, and that's really the eastward shift of hail and tornado activity. Just looking at this year's report, for example, Minnesota is one of the worst states for hail in 2024, and hail was the costliest peril in a few states like Indiana, Illinois, and Wisconsin that for those of us that live out in the eastern part of the U.S., we don't really think about those states as being big hail states. But really, I think as we see the shift happening, more and more of this kind of severe convective storms, hail and tornadic activity starting to slide a little bit further to the east. And that's obviously changing some of the risk out there in the market.
And while hurricanes like Helene and Milton contributed significantly to 2024 losses, the report underscores that losses tied to hail, as you just mentioned, non-weather water, and other perils remain persistently severe. How can insurers broaden their view of risk beyond catastrophic events?
Yeah, when we look at the non-cat stuff, that does tend to be a little bit more within the carrier's control. Water non-weather stands out. California and New York in our report were both at the top of the list when it comes to non-weather water, and those are big states, so that really does drive a pretty big impact on the overall performance of the industry. In terms of how carriers can broaden their view, there are new tools available that they can use to identify areas of most concern for water and really other non-weather perils. But it also ultimately comes down to controlling what you can control. So you can tell a hurricane where to go. You can you can replace a rusty pipe or an old water heater much better than you can influence the course of the weather.
So we're seeing some interesting trends in the data. Severity is rising even as frequency declines for several perils. What's behind this pattern, George, and what does it suggest about today's evolving loss environment?
Yeah, I mean, loss costs actually in our report for 2024 actually went down a little, and that's because frequency went down more than 11% year over year. And I think it suggests that rising deductibles, reduced coverages, and really the consumer's fear of losing coverage are starting to impact claims filing behavior. If you think about it, consumers are thinking twice over filing claims for small issues because they're worried that that small issue might end up with them getting dropped by their their carrier, and then they might have a hard time finding another replacement. And you also think about things like actual cash value and other policy levers that carriers have leveraged over the years. It really does kind of higher deductibles. It really does mean that more of those losses are falling under that deductible and not resulting in actual claims.
Now, from inflationary repair costs to more frequent extreme weather events, the industry is facing a dual force that continues to drive severity upwards. How should carriers think long term about this convergence of climate and cost pressures?
Yeah, I mean, it's a big issue. If you think about it, if loss costs keep going up, traditionally the way you deal with that is to raise rates. And as we've gotten to the point where we're at now, rates have continued to go up to the point where consumers are increasingly uh, hitting that point of lack of elasticity. Right, they're no longer able to stomach all of these higher premiums. So then you look at again coverage levers that you can pull within the policy, and over the last few years, you've seen a number of those actual cash value on roofs being a big one, higher deductibles. But ultimately, you can only give on those things so much. Then where does that leave you? That leaves you with trying to actually mitigate and reduce the risk, trying to predict and prevent the claims from happening in the first place. I'll give Nationwide some credit there. I read an article recently from one of their SVPs on this topic, and I think that it's dead on. You got to get in there and understand what's going to happen and mitigate it ahead of time. Almost more like you might think of a commercial insurance policy, but we're now kind of leveraging these same types of approaches on the homeowner side. So home hardening, fortification, proactively identifying things like plumbing and electrical problems, and addressing them so they can be addressed before the incident occurs, I think is really where the market is heading.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Given the volatility shown in the report, what innovations do you think hold the most potential to help stabilize the home insurance market over the next several years?
Well, it's kind of going back to that same theme, mitigation. And how do you mitigate? Carriers need to do a better job of engaging the customer, the consumer. We did some research last year, I believe, and it really showed that the majority of consumers actually are willing to be a partner in the process, the insurance process. They want to be covered. They want to do the things to mitigate risk, to avoid claims. They just lack the education and context in many cases to do that. There are definitely models out there that carriers can use to do a better job than ever of narrowing down the funnel to identify what the riskiest properties are. There are things they can do at the point of quote to better enhance the consultation with the consumer, for better provide education as part of that point of contact with the consumer, whether it be through their own call centers or agents, or even through independent agents. And then certainly, we see a lot of engagement around consumer-driven inspections like virtual inspections. And you think about a virtual inspection where you're leveraging an app in order to engage with the consumer as they go through the underwriting process around their home. There's the opportunity there to provide back data for education and around mitigation and really to identify and correct things that are identified within the home. So these are a lot of things that I think are available to consumer or to carriers today to help with this approach. And I think it's only going to be a continued migration in that direction by the industry.
Last question, George. Catastrophic events often dominate the conversation, but the home trends data shows rising severity across several non-cat perils, including non-weather related water, liability, and theft. What does the report reveal about these trends, and how should carriers factor them into overall risk and pricing strategies?
Yeah, I mean, severity continues to rise across the board, including in these areas. When you look at things like liability and theft, they certainly aren't necessarily the biggest uh, drivers of loss cost for a carrier in that they're a relatively small percentage of the overall risk, but they are certainly some of the more um, influenceable, for lack of a better term, perils that the carriers are facing. And then for non-weather water, that is definitely, like as we discussed earlier, a bigger piece of the pie when it comes to claims. But in all cases, um, again, there are things the carriers can do working with the consumer, better understanding the risk in the property to mitigate those things. You can think about putting fences around swimming pools or replacing missing railings that you can determine during that inspection process. You can also look at things like what are the devices in the home that can help predict and prevent theft exposure. And then obviously from a water non-weather perspective, that's just kind of all over continually growing peril as the housing stock ages. There's actually a pretty good correlation geographically that can be determined for identifying water non-weather that can be leveraged using a lot of some of the more advanced predictive modeling that we have available today. So there's a lot that carriers can do with these, and it is a good place to start because even though they're not driving necessarily the biggest amount of claims per se, they are driving a big percentage of the claims that are actually within the carrier's ability to influence.
Well, George, thank you so much for taking the time to speak with us today.
Hey, thanks for having me.
That was George Hosfield, Vice President and General Manager of Home Insurance, and I'm John Weber for AM Best Audio.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.